Hi, thanks for joining us, everybody. Today, using ValueLine's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on ValueLine.com and our YouTube channel within the next 48 hours. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers, and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. In order to provide some direction in regard to our stock search, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was prepared by Harvey Katz, ValueLine's chief economist. The first half is ending on a high note, with strong progress being made in reducing the unemployment rate, in narrowing the trade imbalance, and in boosting retail spending, with sales coming in well above consensus forecasts during May. Add in generally tame consumer inflation data, which is allowing the Federal Reserve to stay on a gradual monetary tightening course, and we could see the nation's gross domestic product climb by more than 3.5% in the now ending 3 months. The economy should continue to grow in the second half as this broad improvement displays considerable momentum. Business investment and inventory building should continue to be strong. True, higher oil prices may slow consumer spending somewhat, while the consequent higher prices resulting from our increasingly contentious trade standoff with Mexico, Canada, Europe, and China may also weigh on economic growth. Our sense, therefore, is that GDP growth may well average closer to 3% in the second half. Meanwhile, there is reason to be cautiously optimistic about 2019. As noted, the economy is performing very well. Moreover, with high levels of business and consumer sentiment likely to remain in place, this strength should persist into next year, with our model suggesting growth could average close to 3%. But there are reasons for some caution as well. The trade situation is of increasing concern. More, the slightly hawkish Federal Reserve, which is suggesting it may raise interest rates twice again this year, ahead of a trio of possible hikes in 2019, if the economic and inflation data warrant, could start to dampen sentiment by late next year. If this occurs, we're likely to see a deceleration in economic growth in 2020. Investors are still buying selectively, even as they remain skittish, seemingly preferring to believe the economy's underlying strength will be sufficient to withstand the offshore headwinds and a slightly more restrictive Fed. It may be a delicate balancing act for investors going forward, suggesting that any future market gains will be hard-won. Moreover, due to the concentration of multinational corporations in the Dow and S&P 500, perhaps now is a good time to rotate into smaller caps, especially those that generate the bulk of their revenues and profits stateside. In fact, that is going to be the basis for our search today. I will go into far greater detail when we make our way to the screener, but for now, please note that we are currently on our homepage, www.valueline.com. On this page, you can access, free of charge, daily market commentaries, as well as general interest articles that are written by our analysts. Examples of such content are analysis of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. I'm now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main landing page for our core equities products. I can also head to our home pages for our monthly stock selection services, as well as our investors tools. As you know, the point of this presentation is to find a stock to buy right now, so let's go to the screener and start our search. This tool can also be found via the Find Ideas tab at the top. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I'm now going to run a screen with the information we have discussed. The goal will be to find a small cap equity that appears poised to outperform the broader market without taking on an outsized level of risk. Naturally, let's start with market cap. So I click on the field and enter the criteria. Research houses commonly have different cutoffs for separating small, medium, and large capitalization stocks. At ValueLine, we use the following ranges. Large cap is greater than $5 billion, mid cap is $1 billion to $5 billion, and small cap is under $1 billion. To zero in on small caps, I can use the sliding bar or simply fill out the figures in the from and to boxes. So to isolate small caps, I type 1,000 into the to box. This is in millions, so 1,000 is really 1 billion. And click Filter. As you can see, ValueLine's database includes more than 3,400 small cap stocks. To quickly narrow down the list, I'm going to remove risky companies, which should be a welcome idea, especially during this period of heightened market volatility. There are numerous risk and volatility measures, but we recommend ValueLine's proprietary safety ranks. The safety ranks measure the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. For this, let's focus on equities ranked 1, 2, and 3 for safety, which is average or better. So I just simply click on the 3 numbers. For those that don't know, our safety ranks are derived from our financial strength grades and our price stability scores. For more information here, I recommend a read of our ranking system guide, which can be accessed via the investment education section of our site. Now let's make sure that the stocks have a history of earnings gains, and I'm going to utilize the EPS growth 5-year field. This will weed out companies whose profits have been stagnating or advancing slowly, and even more important, unprofitable outfits. This will also remove newer companies that don't have a 5-year track record. I'm going to set the low bound to 10%, which is a healthy level of annual growth. Historical growth is helpful, but I also want to utilize ValueLine's estimates and projections and pick stocks that are expected to continue to advance earnings over the next several years. For all 1,700 stocks in the ValueLine Investment Survey, we create 3 to 5 year financial projections. I want to highlight that ValueLine is one of the very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. So let's include projected 3 to 5 year EPS growth into our screen. And once again, we'll set the lower bound to 10%. My last field will focus on potential stock price appreciation. Of course, adding in all the earnings growth and safety fields are great, but in the end, we just want the stock price to go up. I already mentioned that ValueLine's analysts create 3 to 5 year projections. Using these values, we then create a target price range for each equity. For the final field, I want to tap into this and include projected 3 to 5 year annual total return percentage, and I'm going to focus on the low end to be conservative. I'm going to use 10% as my starting point, which is above the historical annual rate of return for the major stock market indexes going back decades. FYI, it's about 8%. For this, I have to type in 0.10. Okay, 9 results. According to our criteria, these small caps are not overly risky, have a history of healthy earnings gains, and our bottom line and stock price projections point to sizable increases. Several of these, although certainly not household names, may fit nicely in your portfolio depending on your strategy. However, after evaluating each before this presentation, I'm going to recommend Resources Connection, ticker RECN, as a stock to buy right now. Before I go any further, I want to point out that screens can be saved and revisited later by utilizing the button at the top. Let's now get some more information about Resources Connection. Clicking on the company name will take us to the Equities digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, and hidden so you can create your own customized stock report. For instance, and I will go into more depth in a minute, many subscribers feel that the Analyst Commentary is most important when considering a particular stock for purchase or sale. Thus, perhaps that is the first module I want to see when I pull up this digital report. To do this, I simply drag the box to the top. Another example, since we already focused on safety, maybe I don't need financial strength to take up such a prominent position. I can just click and hide the module. Once I alter the presentation to my liking, I can save the changes from the sliding horizontal action bar. The next time I come to this stock report, it will look the way I set it up. I can also apply these changes to other equities. Let's now get some quick information about Resources Connection, which is available via the business description box. The California headquartered corporation provides finance and accounting, risk management, audit, IT, human resources, supply chain management, and legal professionals to clients on a project basis. Simply put, they are a consulting firm that offers a wide array of services. It has offices in 22 countries. However, and I looked this up earlier, it derives almost 85% of its revenues within the United States. This is an important fact, since the goal of this presentation is to find a small cap that won't be materially impacted by a potential trade war. Resources has 3,300 employees, and insiders own 11.8% of the common stock, which I will also discuss in a moment. Moving on, how has Resources Connection stock performed of late? From the total return module, I can see how the equity is done for some of its competitors, as well as the investment survey average. It has clearly outperformed over the past year, but results aren't as impressive going back further. From the Valuation module, I can quickly pull up a stock chart. I'm now going to take a look at the Analyst Commentary to get some information in regard to what is going on at the company. As ValueLine Senior Analyst Jeff Hurt mentions, Resources Connection is making progress on a number of important fronts. First off, and I am paraphrasing, the company is restructuring its operations in the hopes of generating additional revenue growth and client acquisition. Although the process has had some bumps in the road, fiscal third quarter sales were up 20%. Earnings, however, came in below our estimate. Looking ahead, there are a lot of moving parts, but if all goes according to plan, profitability ought to notably improve as fiscal 2019 wears on. This issue may be more appealing for long-term investors. Decent total return potential is partially supported by the above-average yield. And if expense management improves, ShareNet could step up at a double-digit compound annual growth rate over the coming 3 to 5 years. I now want to show you our classic PDF report, which is included with a digital subscription, and provide some additional analysis on why we think RECN is a good choice. These reports can be found from the button here at the top. Just a quick glance at the statistical array, which is the main numbers section of the page, we can see that the company's sales, earnings, cash flows, dividends, margins, and shareholder returns are all trending in the right direction. Also, on the top left, in the projections box, we can see that ValueLine expects RECN to trade between $25 and $35 during the 2021-2023 timeframe. The current quotation of around $18 leaves a lot of room for a potential appreciation. Also, Resources sports a dividend yield in the neighborhood of 3%, which is nicely higher than the ValueLine median. As mentioned, we think that the payout will continue to grow, which isn't all that surprising considering the profit gains we project. The fact that insiders own a material stake should also help push the payout up by a good annual clip. On that note, especially in this volatile market, stocks that offer meaningful yield tend to hold up better. I hope you found ValueLine's screener and process of finding worthwhile stocks easy and informative. I also encourage our subscribers to utilize the watch list and alerts tools, which can be found from within the Find Ideas tab. The watch list allows you to create a list of stocks that you own or are monitoring and view them side by side. As for alerts, you can set up notifications and receive an email or text message when a specific event occurs. These include when we put out a new report, when we change a rank, or when a particular stock increases or decreases in value by a percentage of your choosing. In all, more than 15 alerts are available. These tools can be accessed, as I mentioned, right here in between under Find Ideas. Lastly, I know this procedure does take time. That is why I want to close with a quick introduction to ValueLine's selection services and model portfolios. For those that want a total investment solution, we offer ValueLine Select, Dividend Income and Growth, Special Situations, and Select ETFs. All of these products are published monthly and provide our top picks and sell recommendations for specific investment strategies. Since we spent the bulk of this presentation discussing small caps, I want to mention that the Special Situation Services focuses on smaller companies with two new recommendations every month. To learn more about any and all of these products, I encourage you to call 1-800-ValueLine for a free sample and or trial subscription. You can also sign up directly from our homepage, ValueLine.com. As for model portfolios, part of the ValueLine Investment Survey is the weekly selection and opinion newsletter. Along with economic and stock market commentary are 4 model portfolios. Each one is a different investment strategy, is actively managed, updated each week, and always contains 20 stocks. The portfolios are overseen by senior research analysts. This marks the end of the formal presentation, and I will now tackle your questions. So give me a quick moment. I am researching a stock. I would like to find average PEs in the same industry. What is the quickest way? The fastest way that I can think of off the top of my head is using the ValueLine Investment Analyzer, which is a significant desktop application that offers screening services even more complex than the one we have online. Regardless of what you screen, you can come up with summary statistics for any list of stocks. So you can get the average and median PE of an industry or any other list. You can also show the PEs in the watch list, for instance, if you build it, but it won't give you the average. You'd have to do it yourself. All right, let me see what other questions we have. One question is, are we limited to 1,700 stocks? The number of stocks and data you receive depends on your subscription. So, as I mentioned earlier, our flagship product, the ValueLine Investment Survey, is data and analysis on 1,700 stocks. However, our database, you may have saw at the beginning of the screener, is almost 6,000 companies, and we have higher level subscriptions that provide that much information. Next question is, do you recommend using stop losses? In several of our products, we do include stop loss recommendations and data. I mentioned special situations specifically, and that has a stop loss on every small cap that we recommend. One question is specific to Comcast. I bought Comcast last week. Would Disney go in and get Fox? Do you still like Comcast? I'm going to refer you to our report on Comcast. I don't want to provide any detailed information on a stock I don't personally follow. Obviously, I'm aware of what's going on with those companies, but I would direct you to our report. Next question, if I get ValueLine through my library, do I have full access to the service? That would depend on what subscription your library is signed up for. You should be able to ask the librarians, and they would be able to tell you. If there's something that you want that your library doesn't offer, I suggest you ask your library or come to our website and sign up on your own. Next question that's specific to resources connections. How safe is the company's cash flow and dividend, and where is that data? So let's take a look. I'll pull up the PDF since it's right here. As you can see, these are the bold numbers are our dividend estimates for the current year, next year, and 3 to 5 years out. The same goes, these are our cash flow estimates. And you can also see our percentages for all dividends to net profit. In each case, as you can see, dividends are well covered by earnings and cash flow. And actually, we have the payout coming down as a percentage of profits as the company's profit growth accelerates faster than the dividend payout. I personally think the dividend payout is safe. It also doesn't hurt, and I mentioned this earlier, that insiders own a good chunk of it. Let's see if there's any more questions. Do you have pricing based on AUM or assets under management? No, that's not a metric we provide. Obviously, that's only pertinent to some financial companies, and we do talk extensively about AUM for the asset managers, but not a metric which bases AUM on price. Next question is, how long is a trial period? The answer is 2 weeks. Next question is, how do you look at funds by fund company in the analyzer? I assume that means fund family. In our fund screener, you cannot search by fund family. But the mutual fund screener that we have has over 60 fields that can be utilized, and it's a pretty extensive screener. Question is, why am I recommending this stock? Because it's a timeliness 4. Okay, well, first off, when this report came out, Resources Connection was indeed ranked a 4, as you can see. However, if we look at our digital report, which is updated more often, remember, our ranks are updated weekly, while those PDFs just come out quarterly. It is currently ranked 3, which is average. And I do heavily look at the timeliness rank before these presentations, and our analysts, of course, use them as well. But it is just one variable, and that's an important thing to note. You would never, or I would never recommend that anyone just look at one piece of data before buying and selling a stock. But it is neutrally ranked currently. If I'm a subscriber, how can I get some more tutorials on the digital pages? Well, as a subscriber, you have access to our customer service department. You can reach them via 1-800-ValueLine, and they can give you a personalized tutorial. And yes, there are a number of videos on our YouTube channel as well. How does your technical ranking compare to the timeliness ranking? Well, they're two very different things. Our timeliness ranks use a number of variables, such as price action, earnings growth, earnings surprise, cash flows, and many other variables to create their rank. And it's for the next 6 to 12 months. Technical, on the other hand, and we can see what RECN's technical rank is. It's currently a 3. Only uses the stock price action from at least 10 different time periods to come up with the rank. And it's for the next 3 to 6 months. So the calculations are very different and the time periods are very different. All right, I believe that's all of the questions. Thank you so much for those that asked questions. I hope you enjoyed this webinar, and as I mentioned earlier, it will be posted on our site and YouTube within the next 48 hours if you want to refer to it. All right, thank you so much, and take care.